Okay, MJ. Let's pop over onto our alpha trading account. This is our alpha trading returns oscillator with alpha momentum price. By who? By the coder wolves. We have great coders. We have great math. I'm just going to come out and say we have a great math guy. In the big scheme of things, you just got to have that math guy. If you want to code indicators, first, you got to have some good coders, but you got to have a guy behind the scenes that knows the math of all this, right? We were talking behind the scenes. There's probably 75% of us that don't know the math. We don't need to know the math. That's why we got our math guy. He knows the math. We code the indicators. Bam, what a team. And so, you know, there's people out there that think they have a patent on math, or they think they're the only ones, or they're bragging about freaking high school math competitions and all kinds of I mean, we're talking about some real narcissism going on. We don't care about any of that. We know we got a good math guy, and we know we code in math and have the math down. We make our own indicators. That's all that matters. So anyway, let's get back to alpha trading. Returns oscillator with alpha momentum price. Okay, so unlike a lot of our indicators that focus on one key statistical principle, such as coefficient of variation or Laplace distribution, for the alpha trading returns oscillator with alpha squared amp, we mixed a few things together. Left them alone for a short while. And when we came back, I love this phrase, a baby had been born. And that's why we call it the RO with their alpha squared alpha momentum price. So first we need to explain a few things, right? Essential background reading, right? For the returns oscillator component of this indicator, we use returns rather than price. We have applied some filtering, the option to apply zero mean, some exponential weighting, and some root mean squaring to make this a wolf of an indicator. Momentum using returns. We measure the R squared. What is R squared? It's the coefficient of determination, if you know your statistics. So we measure R squared distance from the returns oscillator component of this indicator. Benefit of using the returns versus prices is normalization, measuring all variables in a comparable metric, thus enabling evaluation of analytic relationships amongst two or more variables despite originating from a price series of unequal events. This is a requirement for many multidimensional statistical analysis and machine learning techniques. If you wish to delve deeper, please refer to the reference article from Quantivity. It's a great article if you haven't read it. So now, regarding the alpha momentum price of the returns oscillator, AMP is plotted as the columns. Above the axis, the correlation of smooth return oscillation with price is shown. Below the axis, the inverted correlation of the not smooth return oscillation with price is shown. When we talk about increasing correlation, it means that the distance to the axis is increased. This is also supported by the coloring. Gray correlation describes increasing correlation. Everything is good. And I changed up the colors maybe on my chart, so don't get confused on that. I might not have. I'm just want to point that out. I changed a lot of the stuff on my personal indicators. Everything is good. RO direction is trustable and has confluence with correlation. And pink for decreasing correlation. Be careful, reversal could occur. Maybe no confluence with the returns oscillation of the direction. AMP correlation has three main use cases. Find confluence between RO and correlation of AMP. If correlation is increasing gray, the direction of the oscillator is supported. If correlation is decreasing pink, there is no confluence. So what is that telling you? Is when we combine these, there's a lot of time. Returns will make a move, before price action. So you cannot just blindly trade our returns oscillator for direction of price movement. That's where this comes into play. And the AMP is going to tell you if there is a correlation between the returns direction and the price direction, okay? If correlation is flashing, correlation value close to the axis of 0, correlation is about to expand. So think about taking a position in the direction of RO. If there is confluence, increasing correlation, color gray. Number 3, when there is divergence spotted between the RO and price action, divergence between the two are very powerful, and it's something to teach at Alpha Trading. And here is a chart that we put together to show how the indicator works as a whole. Let's blow it up real quick, okay? This is very powerful. And here's a move right here. And as what I've done, I've made a little scale of 4 different scenarios that can happen with this indicator and what you should take a position on. And in my opinion, when you get a 3 out of at least 4, definitely a 4 out of a 4, you want to, now, be patient. Let the volatility take hold. Let the moves start to happen. But if you're getting a 3 out of 4, it's almost a no-brainer to get in that position. And it doesn't matter. This is a daily time frame. It doesn't matter if you're trading on a 1-minute chart. But if you're trading on a 1-minute chart, you better already be very sufficient at trading a 15-minute chart, at trading a 4-hour chart, at trading a daily chart. Because the stuff that's happening on a 1-minute chart is happening so fast, you need to recognize all the same things you would recognize on a daily. You need to do it in a split second, have a little bit of patience on a 1 minute, and be able to figure out how to get a limit order filled, right? It's not easy trading these low time frames. You got to work hard at it. I highly suggest you taking low contract trades while you're learning, or in some cases, if you can actually have a motion while you're trading, while you're paper trading, if you can figure that out, most people have to have a little skin in the game to be able to have a little bit of emotion, right? So that's something you got to figure out for yourself. So on this first position here, RO is showing short position. You see, the returns oscillator turns down, starts literally heading down right here, right? Or actually, I'm on the wrong part. We got to go to the other side of the div. The returns oscillator. This right here is where when you see how look at the returns turn down. Look at the AMP. The AMP is decreasing, telling you, do not take this short position. Do not take this short position. That's what it's telling you. Did we get another flash, right? We have a little bit of a down move right here as it increases, and you can see there's a nice big wick. I would not take that position. This is a daily chart. So returns is showing a short position. The returns turn down. There is bear divergence. This is the second part. There's bear divergence between the returns oscillator and price action. Higher high, lower high. Okay, so that's 2 out of 2. The R squared is flashing. Okay, the R squared is flashing. You can see the flash right here, big time. So you got 3 out of 4 because there is no increase right now. You go down onto lower time frames, this is where this comes in handy. I guarantee you that right about here, if you were to drop onto the 4-hour, that you would see that R squared beginning to increase. So if you know how to do a workflow like that by dropping down, you're immediately in your head going, that's a 4 out of 4. I'm nailing this trade. And that first move that was set, that was a lot. I think I was like 10K, 12K pullback right there. Great short. Now let's go to the second position, right? And it's what I did here, which was fantastic. There is a bear divergence move. There's a hidden bear were they 2 bear moves? Yeah, there was 2 bear divergence moves, but then there was a hidden bull and a regular bull divergence move. I was really trying to get one of each, but it was really hard to get a really good move with hidden bear. So the second position, okay, you can see immediately that the lows, right? There's a higher low on price action right here. The RO up here is showing a long position. So we got RO is showing a long position. There's hidden bull divergence between the returns oscillator and price action. The R2 correlation starts to increase with this move. Look, the smooth and the unsmooth. Look at the gray columns increasing. Okay, so there's 3 out of 4. There was no flash, right? The R squared never got low enough for it to flash. But I'm telling you right now, probably if you would have dropped down on a 4-hour, the 4-hour RO was probably, the amp on it was probably flashing. This was tricky. The divergence was on the unsmoothed RO. That's why I have them both up. This is the smooth. Look at the unsmooth. You see how the unsmooth came back down right there? That's what created the divergence, the hidden bull. It was on the unsmooth. That's why if you have this indicator, don't say, oh, that's noisy, I'm turning this one off. Don't do that. Don't do that. Leave them both on and recognize what you're seeing, because it produced about a $10,000 move back up to the upside. All right, let's go to the third one. The RO is showing a short position right here. The RO is showing a short position. Boom, right? The oscillator has turned to the downside. There is bear divergence between the returns oscillator and price action. There's a higher high on price action. Where the RO oscillator turned down, there was a lower high. That creates bear divergence. The R2 correlation is flashing, right? There's the third. The fourth R2 correlation starts to increase. Look at the candles. Boom. So that is telling you, take this short position. Now you were going to be patient. You might not even been in for 2 more days just to make sure. And then you really see a big increase in the R2. You jump in, you're probably in 80% of that down move right there. And that was a 4-on-4 on confluence. And that was a great trade right there. And now let's go to the last one that created this bump up from 28K. So first off, RO is showing a long position, right? RO is showing a long position. It turned blue. It's heading to the upside. It's not that color on default, but you know me. These the reason why I use these colors is it's easier for me to spot everything. That's why I have a purple background and I use blue and candles. I have a little bit of a vision problem, so this helps a lot. Okay, so number 2, there's bull divergence at the same time between returns oscillator and price action. Right? You got a higher low on the oscillator, a lower low on price action, 100%. And not only that, back here, look, it was actually building from way back here on this low. All lower lows on price action. I just wanted to be more local and show this. We could have included this too, because this is a lower low than that lower high. Or yeah, this is a lower low than that lower high on the oscillator and that lower high. Number 3, the R2 correlation starts to increase. Look at the columns, especially if you wait. Right here, you're going to wait until this crosses the zero mean anyway. And you're going to wait a couple days because look, it was still decreasing. It was still decreasing. If you look at the unsmooth, I think there's a gray candle under there, but this is where patience comes in. If you're trading the daily time frame, you want to be sure, right, that you're going to get this good move. So maybe you're in on this third candle right here. Again, you're in 70-80% of the damn move, and it moved up from 28K, right? I mean, we're talking, I think it was, you would ended up getting about a $10,000 move. This is how you use this oscillator, right? You want to understand that there's 4 different things happening, and you want to get it in your head. I wouldn't suggest trying this out on a 1-minute chart until you can read this good on a 4-hour chart, right? I don't swing trade. I'm not telling you can't swing trade. If you're a swing trader and you trade the 4-hour or the 12-hour or whatever, freaking use this system, right? You use these 4 different scenarios. Now, in my opinion, if you only get 2 out of 4, it's not worth it to me. Unless you know how to work a workflow. Unless you know how to drop down from that 4-hour down to a 15-minute and get that 2 out of 4 up. and be like, well, hey, the 90 minute is showing me a flash. You can probably take that position. But until you learn how to do all that, use this scenario. And I would suggest not taking the trade unless you at least have 3 out of those 4, right? 4 out of 4 is boom, boom. But also, you got to learn how to don't just mark it in. Learn how to drop down. If you see a 4-hour move starting, look at all these candles. They don't just go straight up. You can see wicks to the downside. You're going to get a point where it's going to pull back. You want to be able to figure out how to set a limit trade to get filled. You don't want to mark it into any position, in my opinion. That's how I trade. I save any marketing, any market positions for when either my take profit doesn't get hit, price action turns away from me too soon, or I'm getting out of a position because I'm not emotionally attached to my trade and I've got that mental stop loss. What is a stop loss? It's just a market sell or a market buy. That's all it is. That's why the hell would you just put that in the system and let the exchange see where your stop loss is? Makes 0 sense. That's like sitting in the poker room and you're playing poker with all these guys and you just, hey, can I just play with my cards up? I mean, come on now. Don't do that to yourself. Don't put stop losses in the system. Monitor your trades, right? Take your profit. Limit your losses. Don't be emotionally attached to your trades. Now, let me go over on my main chart and open up the settings. We can get rid of that. All right, let's go over here. Let's open up our settings. Woo! Our wonderful settings that are beautiful. Okay, so first off, source. Okay, number 1, the returns oscillator. It's directional. Okay, and because we built in the amp, guys, you don't need. Hey, you want to source it to another indicator? Knock yourself out. I've tried all of it. Trust me. It makes absolutely 0 sense. I haven't found a good application for that. So don't mess with the source. Leave the source on close, right? The length, right? What's the length? It's just a sample size, right? It's just a sample size. How many candles back? How many candles back? So it's like I'm this guy. I use a 7. Right, a 7 look back is what I like to use. I like it to be very reactive. In my opinion, when you set your length on a 7, it's going to show you better divergences on lower time frames. Now the filter, the low cutoff period, high cutoff period, you don't have to mess with this, okay? I never do. It's pretty much what the coders and what the math people have set. You don't need to change that. It's like that for a reason. Now, do you want to use zero mean, right? Do you want zero mean on or off? You can see it makes a huge difference. I love using the zero mean because somebody had a little revelation. I think it was Sayron the other day. He had a little revelation about, he just realized that this zero mean. He finally understood what it was. And it's like, it's in the wording. It's very powerful to have a zero mean here. Why is that? Because you're going to know whether or not the returns are above or below the mean. And when you bounce or reject off that zero mean, look for div, look for divergence. That's why, it's like this daily, this baby needs a turnaround. It's rejecting close up by the zero mean, and there's bear div, right? So you can pop that back up there. All right. So that's zero mean. We built in some smoothing to it, right? A nice little smoothing length. I've got it set on 11 right now. Sometimes I have it set on 8 when I'm even on lower time frames, but I like it being set on an 11. The smoothing length on 11 is very powerful because 11 is a master number. I don't care what indicator you're using. Start using these numbers, 11, 22, 33, 44, on all kinds of different settings. Start using a 3, a 6, a 9. If you don't know about the 369, look up the information Tesla provides about the 369. It's powerful in any aspect of your life. All right. Now, this same thing goes for like the phase for smoothing. These are just all things that the coders built in here where you don't need to change this stuff, right? They put all this in here to make this indicator operate very smooth. I never change any of this. The only thing I will change is the length sometimes, right? That's why this is such an easy indicator to use. Very easy. There's only a couple settings I would recommend. I'm not telling you you can't. And if you ever get into a position where you're like, oh my God, I've turned my indicator into a train wreck, just go into defaults and hit reset settings. It's going to reset it back to the default that came with the indicator so you don't lose anything. But now we get down here onto the alpha squared alpha price, right? Now, the alpha squared length, right? This is where what's important. And like at this point right now, when I have this on a low period, like a 7, I drop this down from a 30. I like it on a 15. That's a good length. Now, why do I know that? Because I have back tested the crap out of this indicator. And when all these different scenarios are lining up like I showed when I was explaining the indicator, those correlation bumps and decreases, right, with the correlation between the returns and price lined up the best on the 15. And the alpha squared flash threshold I've got set on a 10%. So that means when these columns get below 10%, that's when you get your flash. But that's pretty much the settings. We can go over here on the style. There's a lot of different colors you can change things to. Very self-explanatory. I mean, this is the RO1 smooth. This is the RO smooth. And that is one thing. When I am trying to get a bias on the divergence on high time frames for like some trend changes, notice I just told you to leave on the unsmooth returns oscillator. That's the situation where I'm talking about, to have them both on, because you need to be able to read those high time frame divergence plays. When you're on low time frames, I learned a long time ago, especially when you're down here on the 15 or 5 minute, you want your return oscillator smooth. You really do. It's going to cut out noise, and it's only going to give you those divergence plays that are going to give you some action, right? Unless you're just that small little scalper, $50, $100 moves, knock yourself out. Use the unsmoothed one. But if you're looking to really maximize your profits, turn that back on. Use the smooth one and figure out what smoothing you like the best. Like I said, I like an 11. Here's the bands, right? These are the bands that you see, the volatility bands up here. Let's see here. And these are the different R squared colors, right? The columns. You can change anything you want in here. The background color, the flashes. I mean, there's a lot of versatility into this indicator. So play with it. Right, that's what we recommend in all the descriptions. Play with the settings. If you don't like what you've created, go to defaults, reset it back to what we delivered the product with. So that, ladies and gentlemen, is our alpha trading returns oscillator with alpha square, alpha momentum price. It's a very powerful indicator, but like I said, this is in our first paid package. Okay. I highly recommend learning the basics of volatility trading first with our free chart. We have a free chart available for you to learn on. We're not that guy. We're not that guy where, hey, if you want to learn volatility trading, you got to buy our indicator package. Wrong. That's because that's not what we're in this for. But at the same time, we put a lot of hard work into making some of these advanced indicators. But you will know as soon as you see how much our indicator packages are, it's not about the money for us. It's about delivering good products. And we have a free chart that you could literally trade on for the rest of your life and be profitable. I talked the other day. There's traders and there's people that like to trade, right? There's golfers and there's people that just golf. There's a difference. When you are a trader, this is appealing. You want the most advanced stuff after you learn the basics of volatility trading, because this is just going to add to your edge that you're going to build. And in my opinion, I don't care what technical analysis trader out there is. If they tell you they have an edge, it's an edge of a cliff that they fall off all the time and lose money. When you start trading volatility, probability, and statistics, then tell me you have an edge when you learn this stuff. And let's talk. Oh, what's your edge? Let me get a drink real quick. Yeah, we're going over time. This is when you start building an edge. When you learn how to combine volatility, probability, and statistics, multiple charts, you understand a workflow with the time frames, that's building an edge. An edge isn't, well, you know what my edge is? My edge is I trade the daily time frame. And when you have a golden cross between the, what is a damn golden cross? When you have a golden cross of the 50 EMA crossing up the 200 EMA, and at that time, then you have the relative strength index indicator. It turns up, and it's going up bullish. And when my stochastics are doing this, that's silly shit. It's a random market. You can't trust traditional technical analysis indicators. They're laggy as hell. They're laggy as hell. Volatility's telling you in real time what the hell is going on. What else? What else? The probabilities. You got to know where the probabilities are at, or you're blind leading the blind. If you're watching this on YouTube for the first time, the link to our Discord is in the description of all our videos. We've been growing a lot lately. People are getting the word about what we're doing. Come into the Discord. You just got to do a couple simple things. We let you into the main Discord. Come learn how to volatility trade. Come see about our customer service. We're a great group of people. If you see something in the videos you like, give it a thumbs up. Help the algo, right? Help the YouTube algo push these videos out. We're small right now. We got like 112 subscribers to our YouTube channel, where you got these TA gurus out there that got like 30, 40, 50,000 subscribers and all kinds of freaking views. And it's all foolishness, just getting people wrecked. So definitely subscribe to our channel. You're going to want to know when we put out these informative videos. And as usual, I want to thank everybody that's watching live in the Discord. We appreciate it. We love you guys. We are here to support you. We only ask, hey, support us, not with money. Comment on our indicators on TradingView. Post in the Discord. Post some charts. Ask questions. That's what we're here to do, right? Give us thumbs up on our YouTube videos. So wherever you live out on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. We'll see you guys tomorrow.